In this video, we're going to look at the question of how many stocks should I trade at any one time. Stay tuned. Hey traders, a very warm welcome to you. Okay, so how many stocks should you trade at any one time? I think there's two parts to this question. The first one is how many stocks should I be monitoring if I'm looking to trade? So let's answer that first. Now, if you're day trading, you only want a very small handful. In my opinion, you need a few that are your babies. You know how they move, you know how they drive, you know what the engine is behind them, you know how they behave, and you trade those. Or you have some sort of scanning system that brings setups to you, and so you become a specialist. You're either a specialist in the stock or a specialist in the setup. If you're swing trading, however, that can change. You've got a broad universe, you're looking for specific stocks, you cut off ones that don't fit your criteria, price, market cap, volatility, whatever it may be, you do that. Now, the other side of the question, which I think is the more interesting one, is how many stocks should I trade at once? In other words, how many positions should I have at any one time? Now this comes down, in my eyes, to three things: risk, focus, and time frame. What do I mean by each of those? First of all, let's go to this one first, time frame. So if you're trading, intraday trading, you just physically or mentally don't want that many positions on because you can't look at them all at once. And even if you have got, you've put some on, you've got alerts set, you've got stops, you've got limits, you don't want to be piling all that cognitive load onto you. We want to be making it as simple as possible as day traders. So I would assume, and I guess most people are not going to have more than a handful of stocks they're trading. But let's just say you're swing trading, right? This is the more likely scenario. You're swing trading, you're holding them for several weeks, several months, several days, whatever it may be. How many should you hold? So this does come down to a couple of things: risk and focus. Now, what do I mean by risk? Risk is obviously the correlation between, if you've got a lot of tech stuff that's very, very correlated, you've got a lot of stuff in the same sector, you're basically trading kind of the same thing, okay? Now, obviously you've got a difference between the stock, but we've talked about this in another video. Market moves the stocks most, then it's the sector, then it's only a small chunk of the pie chart that actually is caused by, or the small chunk of the moves actually caused by the stock itself. So you've got to understand how much risk you've got. And if you're saying, okay, I'm trading all these stocks, I'm diversifying my risk, it may well be that you're not. So you've got to look at that one. The other thing, the big one for me, and this is the key to all of it, guys, is the focus. If you've got a massive portfolio, right, let's say you've got a portfolio of broad stocks, you've got your risk, and let's say, going back to risk very quickly, that may not just be the same sector or industry. It could be saying, hey, well, I'm long the market, or I'm short the market, or I'm this and that. You've still got an overall risk there. And the decision you've got to make, which all comes down to this again, is focus. It's like, okay, I like that setup, I like that one, that one, that one, that one, that one. Great, you may have a load there, but are you not better pruning it down so that you can become so focused on the small amount of positions that you know exactly what to do, how to behave, you're not going to get caught out, you believe in the trade? I don't think you can have loads of stocks, loads of shares in your portfolio that you believe in every single one of them. And loads, I mean kind of 50, 60. Some people have got all this, okay, got a hedge fund or whatever, fair enough, you're allocating assets based on things, you're holding them for a longer period of time, new ideas come across your desk, you decide to allocate capital or not. That's a bit different. From a swing trading perspective, you've got to be on the ball. You've got to know what's happening during the day. You've got to know what's happening during the week, where the earnings are coming out. Keep an eye on all this stuff. It's a lot of admin, a lot of management to do. So the fewer you've got, the easier it becomes for you. So the decision then becomes, okay, if I trade fewer, can I get the same returns? Of course, you're going to increase your size per stock that you've got. And then the obvious question that's going to come is, well, why don't I split that risk into multiple stocks? Well, then that's a decision you've got to make from a commercial aspect for the trading business you're running. Do you split the allocation of that capital that's got 100 grand, you're splitting into 10 stocks? Or do you split it into 3 stocks and say, okay, well, actually, I may not be as diversified in inverted commas, but I'm still buying long, I'm still buying the best tech stock here, I'm buying this one here, I'm buying that one here, I'm going short here to neutralize my portfolio. It's a personal preference, but the big thing, aside from the risk and aside from the time frame, is the focus. I think that less is more. Some people might disagree in comment section below. Diversifying more stocks, more trades, you've got more chance of going right. But in my eyes, you want to make as much money as possible with the least risk as possible. And also, you want to make sure you're watching those things like a hawk. If you've got too many, you're going to drop the ball from time to time. You're not going to catch the earnings that are coming out. You're not going to see the news. You're not going to do this. Whereas if you've got a small basket of stocks, 5, 6 stocks, maybe 10 max, you know, if you're pushing it, personal preference here, but you know, that kind of stuff, 5 is a little sweet spot, up to 10, you can monitor them easily. You know what's going on. You know, if, for example, the market goes crazy and you've got to manage all those positions, you can probably just about do that. Whereas opposed to 30 stocks, market's going crazy, you've got to manage all those positions, or you've got to review, you've got stops getting hit, you've got this getting hit, limits getting pinged. It's very hard to kind of do that. So if you're on a kind of medium-term time frame, swing trading, and you recognize the risk with allocating capital across the things, across the stocks, it comes down to the focus. And my advice or recommendation, not giving advice, my personal preference, should I say, is the trade less is more approach to stocks, while still having a small amount of diversification, still having some capital left to allocate to new ideas or new trades that come across the desk, come across the screens, whilst you've still got the portfolio running within the parameters of your trading plan. All right, guys, take care. See you in the next one. Goodbye.